Master Trader Technical Strategies is not one concept. It's about multiple concepts coming together at a similar time. So when I referred to the current day's open and the previous day's close, there's nothing proprietary about that. It's more about common sense. So as this 5-minute chart that I'm showing you here, the blue line is today's open. The red line is yesterday's close. You can see the daily chart here. There's a 65-minute chart here. When you look at the 65-minute chart, we're focused on support and resistance. Once something declines to support, you assume there are going to be buyers there. That doesn't mean it's going to reverse. From an intraday trader's point of view, I need to see stabilization and a reversal on the 5-minute chart. So this is RSP. It wouldn't matter what it is. It's just a chart that I had on my platform at the time to explain to you. And as you can see, on this day, prices opened lower. They opened in the area of the prior day's close, and they couldn't get above it. In addition, they were below the opening price and declining throughout the day. If they had gotten above that close, well, the daily chart had to become positive in some way. You also have to look at the daily chart. Is it starting to move higher? Which if it was doing that over here, there would be a greater probability to recover. Whereas if it's up multiple days in a row, there's a lower probability to recover. So when the price is reversed here and moving down, looking at the daily chart, odds are they're going to come down here to this unfilled gap. Or this area, these pivot highs, become what we call minor support. So it might come down, again, in there, give or take a little bit more. And as it comes down there, assuming it does, I would be then looking to this 5-minute chart to see if it stabilizes. So as it's coming down, we look for this pattern like it has right here, where it's beginning to bottom. If it was happening at this lower level down here, there'd be a greater probability that this bottoming pattern would actually follow through to the upside. Now, on the 5-minute chart, you can see that there's a 60 MA, which is equivalent to the 20 MA on the 15-minute chart. That's still declining, but stabilizing. This red line is the 200 MA, which is close to the equivalent to the 20 MA on an hourly chart. It's declining. I can tell from the 5-minute chart, all time frames are in bearish trends, but in this case stabilizing, but they are not stabilizing on the daily chart at a higher probability area where they would be likely to reverse back higher. Now, looking at this 5-minute chart, as I explained, this is the day's open, this is the day's close, and if prices were to stabilize for a longer period of time down at that area of support on the daily, these lines would be lower, say possibly Monday or Tuesday. I don't know. Well, you can watch yourself and see. And then with this type of a pattern, which is pointing toward a bottom, there'd be a greater probability that this could actually move up. Now, anytime I could find a chart that would be above, and I'm just going to flip to something else to see if I can find it. Let's just see. Okay, here's something in an uptrend on the 5-minute chart. It's above the 20, it's above the 60, it's above the open, it's above the prior day's close. Intraday, this has a higher probability of moving up. I still got to look at the daily chart. Now, this is all likely going to be a bullish trend on the 5-minute chart tomorrow, unless it gaps down. I don't know. Neither does anyone else. But as long as it stays this way, the alignment of the open, prior day's close, these moving averages have a higher probability of prices moving up. Again, it's not about one concept, today's open and yesterday's close. It's about combining multiple time frames and trends, being in alignment or the lack thereof, putting the odds in your favor with a price pattern. I hope that helps. If you have any questions, email me.